Okay, we're back again. So last time we had plotted on the chart what the anticipation was for gold for the next 1 to 2 weeks. And as we can see, it did almost exactly what I had plotted on the chart. As we can see right here, this was my anticipation of what gold was going to do. And as you can see, that's exactly what price did, right? Came over from this zone, went up to this zone on the 4,500, came back down, almost back to the 4,300 zone area, stopped short. And again, if you were to draw a line, you could see that this was also a area of interest because price was reacting in this area. So yeah, what I'm gonna do is I'm gonna clean up the chart a little bit. All right, yeah, so as we can see, price did exactly that, right? Bring this line down here, right? So, and if we were to, let's see, where did the week start? Let's put in a vertical line. I start trading around 8 p.m. EST. So my day was started here, right? So the anticipation was price was going to go up, which it did. But let's say, okay, we're going to skip this. Let's say you missed that, this trade going to the downside, and you considered this right here. Price came down here after going through the 4,300 zone and then came back up, retested, and started going up. And let's say you made an entry somewhere around here, right? And you were going to hold that trade up until it hit the 4,500 zone area, right? So if we were to measure that, so from here all the way to somewhere around this area, and let's say you got out somewhere around here, that will give you, as you can see right here, you just divide this by 10 to get the number of pips from the points. So that will be 2,515 pips, right? So let's start to tally this. 2,515 pips, okay? All right, that's the first move. Then price kind of, bounced around the 4,500 zone and then started to come back down. And let's say you entered your trade somewhere around here and caught it to the downside. So somewhere around here, and you went all the way down here and you got out somewhere around here, because once again you could see that price had historically reacted in this area, right? So that would be 1,757 pips. Okay, let's add that to the tally. 1,757. Okay, let's keep going. And so what I mean by that, if you put the line like we did before, you can see this is the area of interest. So once you see that, you're like, all right, maybe I should get out here because it's not going to go all the way back down to the 4,300 zone. But that's also a strong indication that price is getting ready to move up, right? That's a good indication, because that means sellers are losing momentum to buyers. Okay, all right, let's get rid of that line. And then another thing that I like to use also, let me go ahead and add this, is the 50 MA, right? So depending on what the market is doing, volume and all that, right? But just generally speaking, the more price is away from the equilibrium, it's eventually going to retract, right? So once you start seeing a strong reaction with price and the distance from equilibrium is pretty, substantial, then it's probably time to get out or maybe take some profits, whatever your trading plan is, right? So we can see right here, price way off equilibrium, reacts, comes back. Same thing over here, way off equilibrium, reacts, comes back, right? And you can see this over and over again. Anyway, let's get rid of that 50 MA for now. All right. So, so far we have done what? Is it 3? We did the 25 and then this. Okay. So now you get out, but you notice the price is going up. So you enter another trade around this area, right? So let's say you enter your trade somewhere around here and you hold it up until the 4,500 zone area, and say you get out. Okay, boom. So that's 1,303 pips, right? Let's add that to the tally. Huh, what happened? Oh, let's go back to history. Oh, no history. Did we delete it? Oh my God. So anyway, if I recall correctly, it was 2,500 around, and then it was 1,757. And then now we're going to add the 1303, and we're at 5,560 um, in pips, right? Then you had this slight downside, but maybe you didn't do that because you're waiting for the upswing to see what gold is going to do, right? And let's say you put your trend line here just to see is gold going to do anything, right? And like I said, what I like to use is the 50 MA because it's a dynamic. Um, I use it as a dynamic support and resistance as well, but also as a trend line because you can see like, okay, price came back down here, went a little bit over the 50 MA, but then came right back up, right? Did not go below that. That's another strong indication of what price is trying to do and buyers taking control over sellers, right? Then over here, it came back down, but went back up, right? So forth and so forth, right? But you were right here, so you were not ever going to see that. But once you see price react off the 50, come back here and close, you enter your trade right here. And let's say you kind of hold it all the way to the, to the top, right? So let me get rid of this line. So let's go ahead and measure that. So you enter somewhere around here and you hold it way to here. That gives you 1,091 pips, right? So let's add that to the thing. 1,091. Also 5,560, right? 5,560 plus 1,091. Okay, so we have 6,665 pips so far, right? So once again, maybe you don't get the downside again, but then if you did, that would be some additional pips. But let's say you're waiting to see how price reacts once it retracts, right? Again, comes down in the 5,500 zone area, plus it also bounces off the 50. And let's say you're going to enter your trade right here, right? Somewhere around here, boom, and you're going to hold it all the way to the top of the 4,800. Maybe add some positions or just nurse that one trade, right? Depends on how you trade. Okay, right? So yeah, you entered here, price came and retested, but you kept holding because you have a stop loss right below the reaction down here, and you just hold until the trade comes all the way up here. Now, this move right here is 2,200, right? So 2,288 pips, okay? So 2,288, okay? Now, that gives you a total of 8,939 pips, right? That's a lot of pips that you could have had just following the plan or the anticipation that I had drawn out on the chart if you were seeing the market the same way, okay? Now let's say maybe you didn't catch all the trades and you only caught half, so you divide that by 2. That's still 4,400 pips, 4,469 pips, right? Okay, now let's take a look at the factors that are going to affect gold moving forward. So the fundamental catalysts that are going to affect gold. Well, today we had the ADP and retail sales data, and then we also had the ISM manufacturing PMI data, right? These didn't really do much because again, the numbers that came in were not really that substantial. Let's see if we go here, bring up the calendar, we can see right here, around 8:15 and 8:30, we had the ADP, which is right here, and then we had the retail sales, sales, core retail sales and retail sales month to month, right? Now, if we look over here, the ADP was anticipated to be around 41K, with the previous being at 66, came in at 62, which is above what was anticipated or forecasted, but much closer to what it was before. So that was positive news for the dollar. And then also when you look at the core retail sales and retail sales, it was also positive. not by a whole bunch. So overall, these did not have that much influence in terms of affecting how gold would move, right? And then at 10 a.m., go down here, we had the ISM manufacturing PMI, right? Which was forecasted to come in at 52.3. It came in at 52.7. So even though it was positive, but it wasn't much from the previous and what was forecasted. And so that did not really move the needle a lot in the market. And if we go back to the chart, we can see, so we go here. All right, so this is around 8 a.m., right? So we can see that there wasn't really a huge jump. There was a bit of hesitation in the market, but then it continued. And then if we go here to 10 a.m., again, a bit of hesitation, but nothing much. And the market continued, gold continued on its upward trend, right? So yeah, that was all that happened. There was no crazy moves or anything like that in the market. All right, back to the chart, to the calendar. Now, at 9 p.m., President Trump is going to speak. It's going to be interesting because you never know what he's going to say. You know, he could say anything, and it could affect the market um, drastically in any direction, depending on what he says, right? Um, so make sure your trades, if you have any trades in the market, are protected before this event, or you're completely out of the market before this event, depending on how you trade or what your trading plan is. So watch out for that. And this is going to happen at 9 p.m. EST, Eastern Standard Time in the US. So wherever you are, plan accordingly. Okay. All right. Now, what's going to happen in the future? Well, again, let's go back to the calendar. I don't know why I got out of that. Go back to the calendar and go to tomorrow. Tomorrow, the only red folder we have is at 8:30, and this is the unemployment claim, right? Now, it was a 210, forecasted to be a 212, you know, slight bump upwards, but nothing drastic. So if it comes in within that range, with not too much of a change, either or, again, it's probably not going to move the needle a lot. And then we have Friday, which is going to be April 3rd. We have the average hourly earnings, we have the non-farm employment change, and unemployment rate. Now, typically, this data can drastically move the market depending on the numbers that come in. So we look at the average hourly earnings. That's not going to be much of a change. It's supposed to drop to 0.3 from 0.4. And if it comes in around that number, you know, it's not going to be much. However, employment change, negative 92, forecasted for positive 65K. That's a drastic change. If the numbers come in as forecasted, that's definitely going to have some influence on the market, and you're going to see some movement. Okay. If it comes in positive, then obviously that's going to strengthen the dollar, and that means gold is, depending on what else is happening, right? Because we know what's going to happen with the war, right? It's probably going to sell drastically, at least for Friday, if the numbers come in as anticipated or better. But you also have the unemployment rate. It's 4.4, forecasted to be 4.4, so basically no change. And if that comes in at 4.4, then that's really not going to have much of an influence. But again, the major thing to watch for is the non-farm employment change. That's probably going to have the most influence on the market on Friday. Okay, so that's the data that we're expecting to show up and possibly influence what gold does in the market, right? And I think the major one is going to be, once again, the non-farm employment change on Friday. So watch out for that and be ready. And then also at 9 p.m. today, EST, Trump is going to be speaking. Who knows what's going to happen, whatever he says, right? So watch out for that. So those two events. Okay, now, then of course you have the geopolitical situation happening, the war in Iran, obviously, and what's going to happen with that in terms of oil prices. Are they going to have a deal? Is there going to be no deal? Is oil prices going to shoot up to crazy amounts? And how is that going to affect people in terms of allocating their investments, right? And how that's going to affect gold. But the worse the situation gets, I think gold is going to look more and more bullish, right? Regardless, really, of the oil prices, because I think the oil price thing is most likely short term if it spikes, and will come down to sub 100s. Okay. All right, on the technical side, we already kind of looked at that, but these are the major um, resistance and support levels to look out for. So we have 4,800, which is a major resistance. We already saw that on the chart that I had already marked up. So if we go back here, so 4,800s, this is that major resistance. Okay, and then at 4750-ish is sort of like the minor resistance, if you will. See it right here, and that's around somewhere around here. And that's why I have that white line. You can see even price reacting around that white line. But really, this is that whole zone, the 4,800 zone area, if you will, right? Okay, and then we have the 47.19, which is where price was at the time that I run this, but we know price is above that now. So this, it's above that now. And then you have the immediate support, which is around the 4680-ish area. And then you have major support at 4,300 to around 4,400. And again, this is the major support about the 4,300 area, 40, basically this zone. And then the mid-range support is around this area, right? So those are your areas of interest or zones of interest, levels of interest that you need to pay attention to and see what price does to that. Okay, what's next? All right, so just a quick update, what's happening in the news. Just came across this piece of news here talking about gold and silver are gaining ahead of the Trump speech at 9 p.m. And the major reason is because they anticipate that he's going to come out, as you can see right here. They're saying he's going to come out and say that, the war is kind of winding down, which means oil is going to tank. And so people are taking their money out of oil and putting it into gold, right? And that's what's driving the latest bullish movement on gold. So yeah, interesting piece of news there. And if we look, you can see gold moved up. Now let's take a look and see what's going on with oil. And we can see oil has definitely tanked, right? It was at the peak, it was around 110. Now it's down to 100, right? And depending on what he says, it's probably going to drop even further. But again, we shall wait and see. Okay. All right. All right. So now, what is the anticipation of what gold is going to do now? Let's kind of clean this up right now. The chart, get rid of that, and extend this somewhat. Go to the 4-hour. So, anticipation. I think gold is going to drop some to around the 4,600 area or so, and then it's going to move back up after the big man's speech. And this is a big if, assuming he says the war is winding down, which I think he is going to say because he's trying to get out of this deal. Okay, so I think that's what gold is going to do. Pull back somewhat to around this area and then pull back up, right? And stay in this area waiting for Friday news. And if the news comes in as anticipated for Friday, where you're going to have a lot of gain in the non-farm employment change, which means it's going to be positive for the dollar, then gold will drop again, probably to the, will drop to the 4,500 zone, right? Let's make this. So that's what I think could happen with gold. So basically, it's going to change. It's going to trade between these two zones for the most part. So be on the lookout for that and plan accordingly. That's my anticipation based on what I'm seeing, but doesn't mean that's what's going to happen, right? So always make sure you have risk management in place and you're planning for risk management, right? Using your stop losses, sizing your trades accordingly, etc., etc., etc. Okay, and last but not least, let's join, go ahead and join the free Telegram group. The link is right there on the screen. And I usually share my analysis on gold and updates as we go through the week trading gold and what's happening in the market. Here's some of the information that I shared before. So yeah, get into the group so we can share, learn, and encourage each other as we try to trade this crazy market. Okay. And there you have it. All right.